Hello students and welcome to the accountancy class of class 12. In my last few videos I have taught you the chapter cash flow statement, how the cash flow statement consists of three different activities, and I was explaining the operating activities, the first part of the cash flow statement. Today in this class I am going to show you a very simple and basic sum, a basic illustration of this cash flow statement operating activities part, so that you can understand how to solve sums based on cash from operations. So this is a sum that I have written for you. This sum, from this sum you have to find out cash from operations. This is the first part of the cash flow statement. The first part of the cash flow statement is all about operating activities or cash from operation. You have to find out cash from operation from a sum given to you. This is the sum. See this sum very carefully. There are two year endings given to you. Two different year endings, 2012 and 2013. Now what we need to do is we need to compare these 2 years and find out the value of increase and decrease in the current assets and current liabilities. I have told you that cash flow statement, in cash flow statement operating activities deal with the inflow and outflow of cash from these current asset and current liabilities. So today I am going to show you how to do this. See, in these 2 years we will do a comparison. First, I have told you the starting point of cash from operation, or the starting point of cash flow statement is the net profit that we will get from the sum. So this is the net profit. Profit and loss account. See, the profit and loss account balances of 2 years are given here. 2012, 20,000, whereas 2013, 30,000. So the two balances in the two different year endings are given to you of the net profit, that is profit and loss account. So you can see that in 2012 the balance is 20,000 and it has increased in 2013 and it has become 30,000. So how much it has increased? It has increased by 10,000. 20,000 to 30,000. So 10,000 is increased. So we will write in the solution, we will do the solution in this format. We will write cash from operations as the heading and then start the sum from profit during the year, which is the net profit. Profit during the year is the net profit. The net profit is 10,000, which can be obtained from this 30,000 minus 20,000. The current year minus the previous year, that is 10,000 you are getting, and writing this 10,000 in the outer column. There are two columns. Outer column you are writing this 10,000. Then what you are going to do is you are going to assess these current assets and current liabilities. See the debtors. In 2012 it was, the balance was 50,000, whereas in 2013 the balance has become 40,000. So debtors has decreased. What I have told you in my earlier class, that decrease in the current asset means increase in the cash flow, and increase in the cash flow means you have to add it with the net profit. So add debtors, decrease in debtors. How much it is decreased? It is decreased 10,000. Then stock. This is also a current asset. Current asset, the previous year value is 20,000 and now it is 16,000. So it has again decreased 4,000, and decrease means increase in the cash flow. So it will also be added. Add. Remember the formula that I have explained in the previous class, that decrease in current asset means adding it because it means increase in the cash flow, whereas the increase in the current asset means decrease in cash flow, which you have to deduct. So here we have to add decrease in stock. How much it is decreasing? 4,000. So 4,000 you will write over here. Next is creditors. Creditor is current liability. Now what the value of creditor is decreasing, which means outflow of cash. So you have to deduct it following the previous class. So less decreasing creditors. What is the amount? 5,000. 5,000 is decreasing. We have to deduct it. So we are using this bracket because in accountancy negative figure is symbolized through a bracket. Next is bills receivable. This is also a current asset. Current asset is increasing. Current asset is increasing means you have to deduct, because current asset increasing means it is inflow of cash. It is current asset increasing means it is outflow of cash. So you have to deduct it. Less increasing bills receivable. I am using short form. Bills receivable 4,000. It is increasing, so it will be deducted. So again bracket to symbolize the negative figure. Last is bills payable. Bills payable, and this is 20,000 and it has increased to 40,000. So 20,000 is increasing over here. See, it is 20,000 and it is increased to 40,000. So current liability, bills payable is a current liability and it is increasing, which means add, that is inflow of cash. So increasing bills payable, which is 20,000. Now you do this calculation. 10,000 plus 14,000 plus 20,000, that is 34,000, and 34,000 minus this 9,000. 34,000 minus this 9,000 becomes 25,000. So ultimate figure is 25,000, which you will write in the outer column, and then you will add it with the net profit, which is 10,000. So 10,000 plus 25,000 gives you 35,000, and this is the answer. This is the cash from operations. Cash from operations. This is how you will solve the sum if there is no other adjustment. This is just a basic sum to give you idea about how to solve the sum. I hope you have understood whatever I have explained through this very basic illustration. In my next class, I will make another sum and solve it to you with some other adjustments which will be added with the profit during the year, and then we will do the adjustment in the current assets and liabilities. Some other adjustment will be there, some depreciation, some goodwill treatment. In this way, step by step, we will learn how to prepare cash from operations, the first part of cash flow statement. I hope whatever I have explained through this sum, you have understood and it is clear to you. If you have any problem, leave a comment. In my next few classes, I will again solve some of the difficult sum with some more adjustment. So up till then, goodbye.